Current macroeconomic overview. Global growth trends. Slowdown evident. The IMF projects global growth to decline from 3.3% in 2024 to 2.8% in 2025, with only a marginal rebound to 3% in 2026. This deceleration is most acute among advanced economies, where growth is expected to drop to approximately 1.4% in 2025 and edge up to 1.5% in 2026. Downside risks intensify. Geopolitical tensions and trade policy shocks are weighing on business confidence and capital expenditures. Policymakers must question whether published growth rates understate near-term fragilities. 2. Inflation and monetary policy. Inflation persistence. Headline inflation has moderated from its 2022 to 2023 peaks, but remains well above central banks' 2% targets due to sticky core services and food prices. In the Eurozone, core inflation plateaued in Q1 2025, despite a drop in energy costs. Central bank stance. The Federal Reserve, ECB, and Bank of England have signaled that rates are likely to remain at restrictive levels into mid-2026 to ensure inflation is fully tamed. Some market participants expect rate cuts as early as late 2025, but high underlying service inflation may force central banks to err on the side of caution. Key question: is there enough slack in labor markets to bring down wages-driven inflation, or could premature easing rekindle price pressures? Labor markets and unemployment. United States. Unemployment holds near 3.8%, slightly above 2024 lows, but still historically tight. Wage growth has slowed from 5% YY in early 2024 to roughly 3.5% in Q1 2025, but remains elevated given muted productivity gains. Eurozone. Unemployment was around 6.5% in April 2025, with notable disparities. Germany near 3.2%, Spain near 13%. United Kingdom and Canada. UK. Unemployment ranged around 4.1% as of Q1 2025. Labor shortages persist in health and tech sectors despite slowing hiring. Canada. Unemployment at 6.2% in April 2025. High household debt amid rising mortgage rates is pressuring disposable incomes. Regional breakdown. United States. Growth dynamics. Real GDP growth slowed from 2.5% in 2024 to an expected 2.2% in 2025, driven by cooling consumer spending and weakening business investment amid policy uncertainty and tariffs. Trade and tariffs. The latest 25% tariffs on Canadian and Mexican imports are estimated to shave up to 0.4 pp off Canada's 2025 growth and to hold U.S. inflation 0.2 pp higher. The U.S. rescheduled a potential 50% EU tariff originally slated for July 2025, easing immediate market angst, but leaving a sword of Damocles over supply chains. Skeptical note: stock market rallies in May 2025 may be disconnected from underlying fundamentals, given weak durable goods orders. Eurozone. Growth and divergence. Germany is projected to grow by 1.1% in 2025,